Good day everyone, my name is Benjamin Lu and I'm from Phillip Futures. In today's Market Watch, we will be looking at crude oil for the second quarter in 2018. I've condensed 4 primary drivers for crude oil's performance in the second quarter and beyond. The first being global oil demand, the second OPEC's policies, the third geopolitical issues, and the fourth US shale. Macroeconomic conditions have shown to be robust for the first quarter in 2018. US GDP has been forecasted to stand at 2.9%, while China's GDP looks steady at 6.8%. As such, global demand looks poised to exude vigor as Chinese teapot refineries will capitalize on increased import allocations along with healthy economic conditions. As we move on to OPEC, OPEC's plan to drain excess capacity has boosted oil prices significantly in 2018. The group will meet again in June 2018 to discuss on a supply cut extension into 2019, along with prospects of a stronger and longer-term alliance. We postulate for a consensus between members on extension into 2019, and as such, oil prices will be boosted by a policy continuation. OPEC's production has stood within the established parameters for the first quarter of 2018. The group has been largely compliant with a record high rating of 147% in February this year. OECD commercial stock levels have dwindled by 202 million barrels since January 2018 and are currently 10% above the 5-year average. As such, OPEC has closed in on their goal to eliminate excess capacity and bring back global oil inventories to the 5-year average target. On the subject of geopolitical risks, oil prices will retain an element of volatility for the second quarter. Trade protectionist agendas by the US and China will weigh in negatively on oil prices as markets react to a potential of weaker global demand. Middle Eastern tensions, along with possible oil sanctions on Iran, will allow for a geopolitical premium in prices as the market broods over the prospect of a supply bottleneck. As we focus on the charts, we can observe for the effects of geopolitical issues on crude oil prices. The trade spat between US and China have weakened oil prices as the daunting prospect of lower demand weighs in, while the conflict in Syria have enacted a bullish momentum as markets priced in on the escalation of conflict in the region. As such, geopolitical issues will remain a fundamental proponent in effecting short-term swings in oil prices. The US shale narrative will remain a fundamental cause for concern as rising production levels and rigging activities create headwinds for prices. The US has taken over Saudi Arabia as the second largest exporter and is poised to muscle Russia as the #1 producer as output continues to surge at an explosive pace in 2018. US production levels have increased by more than 1 million barrels since January 2018. Rig count has swelled by more than 80 as US shale producers capitalize on higher prices and margins. US output will remain a cause for concern as rising production acts as a cap to exponential gain in oil prices for 2018. Thus, we assess for a bullish momentum within range to be seen for the second quarter. Oil prices will remain fundamentally supported by OPEC's efforts on production and dwindling global stocks. Key support and resistance levels that you may want to pay attention to include the upper 2 bands of the Fibonacci retracement chart. We postulate for a bullish momentum in crude oil prices coming forth as commendable efforts from OPEC underpins our assessment for the second quarter of 2018. However, range-bound conditions will be felt in the charts as US production level weighs in to prevent an exponential surge in oil prices. As such, these are the fundamental drivers that investors will want to look out for in the second quarter. The first being weekly reports on US inventories and production levels. The second, outcome of OPEC's meeting in June 2018. The third, will US implement oil sanctions on Iran? And the fourth, prevalent geopolitical risks in the second quarter. With this, I'll end this episode on Market Watch. Thank you very much and do subscribe to PhillipCapital Facebook and YouTube for more Market Watch episodes. Have a pleasant day ahead.